Hello. Today we are talking about Vedanta Limited and could the stock have a huge rally? And the main thing we're talking about is whether the next 2 quarters, 2 to 3 quarters earnings will be very good or not. And in order to analyze if these earnings are going to be good or not, we're going to take a look at the company's latest con call where management has said some very interesting things. Okay. So the management has said, let us read. Looking ahead, I'm confident that fiscal year 2026 will mark Vedanta's strongest year ever, surpassing a previous EBITDA record of 6 billion USD in fiscal year 2022. This performance will be powered by our capacity expansion, production growth across aluminium, power, zinc international, iron and steel, and supported by recovering commodity prices. Okay, they're confident that the EBITDA, earnings before interest, taxes, depreciation, and amortization, will cross $6 billion in fiscal year 2026. They're having capacity expansion, production growth across all these segments, especially aluminium, and better commodity prices, metal prices. Now, 6 billion. Okay. Remember, Vedanta's prices, the prices of their products will be denominated in USD because they are based on international metal exchanges prices, while the raw material, while their costs of production will be in INR. So the price of products will be in USD and the raw materials will be in rupees. So if depreciation of the rupee happens, that favors them, mostly favors them, from what I understand. Now let's take the calculator. 6 billion, all right? $6 billion. Let's take an exchange rate of 87 rupees per dollar, gives us around 522, 52,200 crores. Okay, 52,200 crores of EBITDA. If you go to the company's profit and loss, okay, take a look at this operating profit. This is the EBITDA. We will compare 2025's EBITDA. So fiscal year 2025's EBITDA was 42,342. Now, assuming 87 rupees as the appropriate exchange rate, assuming what I said is true, so 52,200 crores, which is the 6 billion EBITDA, divided by 42,343 gives us a growth rate of around 23%. 23% growth in EBITDA. And very importantly, take a look at this. These are the quarterly results. Remember that 23%. Now we're assuming that we are remotely close. Because if we are not, then okay. But 23% growth in EBITDA. Now take a look at this. These are the quarterly sales and the quarterly sales growth. For the quarter one and quarter two this year, okay? June 2025 and September 2025, revenues rose by only 5.76% and 5.94%. And the EBITDA margins, these are the same. These are the EBITDA margins, 26%, 29%. So if the EBITDA margins are the same and revenue growth was only 5.7%, 5.94%, which means that EBITDA also grew by around 5.7 to 5.94%. So in order to grow by 23%, assuming the previous premise is correct, in order to grow by 23%, quarter three and quarter four have to be exceptionally good. They have to be extremely good. Again, let's assume that 52,000 figure, okay? 52,200, and we see these two quarterly rates, okay? 11396. They have to achieve around 30,000 crores. 30,000 crores worth of EBITDA in the last 2 quarters. Divided by 2, that's around 15,000 crores of EBITDA they have to achieve. So 15,000 crores EBITDA compared to December 2024 and March 2025. Quarter 3 and quarter 4, 11,000 crores here and 11,000 crores here. So could they produce a generational 30% growth in EBITDA for the last 2 quarters? We don't know. So this is the target, and let us see if the analysis will be correct in the coming quarters. Now, let's just continue, okay? Where is it? Yes, this is another statement. With several growth projects coming online and a stronger expected revenue run rate in H2, quarter three, quarter four, we are confident in achieving an annual EBITDA of more than 6 billion USD in fiscal year 2026 at the Vedanta India consolidated level, surpassing the previous records and supporting Vedanta's transformation into a global leader in critical minerals, energy transition, and technology. So energy transition, oil and gas, oil and power, selling power. They're having these their own power plants. They're going into that sector. They're already in that sector, but expanding that. And critical minerals, yes, they're acquiring more and more critical mineral blocks. That is another exciting thing. Yes, now we're going to go to page 8 and talk about the latest quarter itself. Latest quarter, okay? Our large business, which together contribute over 90% of Vedanta's EBITDA, continue to deliver strong earnings. Large businesses contribute 90% of its EBITDA. Aluminium EBITDA for this quarter, okay, quarter two, EBITDA was around 5,532 crores, up 33% year on year, 35% margin. Then let me check if it is clear or not. Yes. Then Zinc India's EBITDA was around 4,434 crores, up 8% year on year. Okay. With the best in class 54% margin, 54% profit margin. So, understanding the company's business, the main thing is aluminium. We're talking about future growth, aluminium has to be mentioned. Future good growth, aluminium should grow very well, then followed by Zinc India. Zinc India is the second largest business. Then we go down to oil and gas. The oil and gas EBITDA of 1,029 crores, maintaining a healthy 44% margin. All right. And let's continue. Yes, heavy heart. The return on capital employed improved by around 347 basis points, which is 3.47 percentage points, and it's about 26%. Then two more things. On the balance sheet side, we have further strengthened our leverage. The net debt to EBITDA ratio has declined. It is right now 1.37 times and improving. That's an improvement from 1.49 times last year. So net debt to EBITDA has improved. Then we have reduced our interest cost at the cost of the debt that they have to 9% with average maturity tenure of around 3 years. So average loan tenure is around 3 years. Loans will be, I think, I don't know, I think the bonds, the maturity is around 3 years. So after 3 years, they have to repay that money back. So interest cost reduced to 9%, and they're targeting to bring down our average cost of borrowings to below 8%. So they're thinking to actually refinance the loans, existing loans, take new loans at lower interest rates in order to lower the overall cost of borrowing. So maybe interest payments will go down in the future. I think there's page 7. Oh no, I think everything's covered. Yeah, everything's covered. So let us see if in the near future Vedanta Limited can have close to 30% EBITDA growth in the next 2 quarters in order to fulfill that $6 billion EBITDA mark. And I hope that this analysis that their prices are denominated in USD because they're determined by international metal exchanges and their costs are in INR. It is true. I hope that's true because if that 87 rupee exchange rate is not valid and it turns out that that 6 billion is another 6 billion, then the entire analysis is screwed. And the one thing that did put a bit of a hesitation was that they mentioned in the con call that they're trying to surpass their $6 billion EBITDA in fiscal year 2022. Now, if we look at fiscal year 22, where is fiscal year 22? Here it is. That was around 44,824 crores EBITDA. So I'm thinking, hold up, $6 billion of fiscal year 2022 EBITDA is only 44,824. But fiscal year 2026, 6 billion is 52,000 crores. Of course, the exchange rate, the rupee has depreciated a lot since then. So I hope I'm thinking this correctly, that the exchange rate right now, they're talking about this billion. And let us see if in the next coming quarters, Vedanta can see around 30% ish, like 15,000 crores of EBITDA they have to achieve in quarter three and quarter four. If you have 15,000 crores as a baseline, what is the quarterly EBITDA? Let us see. Quarter three and quarter four, 11,000. Let's take 11,300 as a base. Yeah, 32% they have to achieve around, using the calculator, 32% growth in EBITDA each quarter. Let us see if they can achieve it. That is it. Bye.